Video editing specialist Forbidden Technologies has just unveiled its preliminary annual results and describes 2015 as a year of stabilization, reorganization and regeneration. To go through last year's highlights and find out more about the targets for 2016, I am pleased to be joined today by Chief Executive Aziz Musa and Finance Director Jonathan Lees. Hello to both of you.
Hi, Charlotte.
Hi.
And thanks for joining me today. Now, Aziz, before I turn to Jonathan for the financial highlights of 2015, I'd like you to go through all the key changes you have implemented at the company last year.
I think 2015 was categorized really by stabilization. We left 2014, we had to make some structural changes to the organization. We had to close our US office. It wasn't an appropriate sales strategy in the US, and we wanted to variabilize our sales resource out there. So we undertook that stabilization process, and then following that we had to undertake a reorganization too. Some fundamental changes really at board level and then at executive level as well. And in the summer the board asked me to become CEO, and in November I was appointed CEO. So within that reorganization was really about us understanding how do we want to drive this business forward. And actually our story is shifting. It's shifting from one of a product development story to a growth story, and actually that's the regeneration. And we really see that within the results, particularly in the second half and furthermore in Q4 of last year. So that regeneration is really focused around the commercialization of a business, around an entirely new structure, around an entirely new sales team, around a focus of variabilized sales resources across geographies and across products. So last year I would categorize in those three terms: stabilization, reorganization and regeneration.
It was also a year where you reduced costs massively, let's face it, and you've improved your profitability, haven't you?
Yeah, absolutely. I think that we had a focus really on shifting our burn rate, shifting our cost structure around as well. So we reduced costs significantly last year in the first and in the second half.
2015 was also a year where the company reduced costs significantly and improved profitability. Jonathan.
Yeah, let me just run down the P&L. We generated just over £700,000 in revenue, which is around just 3% up on the prior year. Our margins are stabilising above 84%, and we generated a gross profit of £600,000. We spent £2.6 million in operating costs versus £3.5 million last time. So that's £900,000 of savings. And within our £2.7 million, there's around £200,000 of one-off restructuring costs. So total annualised savings year on year is £1.1 million at the operating cost level. So we incurred an operating loss of £2.7 million versus £3.7 million the year before. So there's an improved bottom line. On top of that, we saved £400,000 in capitalised expenditure. So in 2014, we spent £900,000 in intangible development and tangible capital assets. In 2015, we spent £500,000, so another £400,000 of savings. So total savings year on year of £1.5 million. So, and that is positive, and that means that our cost base from a peak position, peak spend in 2014 of 4.5 has dropped to 3 million. And the thing to remember about this 3 million now is it is money to be spent on commercializing the business. It's not on product development. And so what we have within the 3 million that within the cash burn at the end of the year is a much more variable, discretionary spend, one that is far more controllable than it was a year ago. If I could just return to the revenue number, just to give you some data points going forward. Deferred revenue and forward-looking agreed deals from which revenue will be generated in the future beyond 31/12/15 was £290,000 as of 31/12/15. That has subsequently risen to £360,000 as of today. So that's a 24% increase in 2 months. And bear in mind that that number at the interims was 220k, that we have gone up the same amount in 2 months as we did in the whole of the second half. So that is a very important proof point to be aware of in terms of our future growth.
Is this level of growth you have seen at the start of 2016 sustainable?
Yeah, absolutely. I think that that's really our focus for this year, and I think that Jonathan made some really important points. And on top of that, if you just look under the surface of the top line number, if you just look under the surface of £709,000, you see decline half on half in H1 of -6%, but growth in H2 of plus 12%. Half on half versus 14, and actually when we break that down further, the majority of that is in Q4. So again, it's really reflecting this change in our organizational attitude, driving growth, driving our commerciality forward, and we've taken that from Q4 into Q1, and the announcements that we've made this year kind of talk to that point directly.
Going back to your profitability, how do you address investor concerns over the cash burn rate when you need to raise money?
Yeah, it's a fair question. I think that it's really important for investors to understand a few things. The first thing is that we have multiple growth plans that we've set out. So it's something that we've spent a significant period of time really analysing and really understanding which are the viable growth plans for us to address. Some of those plans require no additional funding. Some of those plans do require additional funding. Some of the more exciting ones require additional funding, some of the more exciting growth curves. But it's just simply too early for us to answer that question. The reason for that is that we've got 2 new products, both of which are in their embryonic phases of revenue development. And so it's really almost impossible for us to really understand how that's going to impact our underlying financial structure in the first half, let alone in the rest of 2016. So, the key thing is that we don't have to make those decisions right now, and that we have multiple options ahead of us, and we'll choose the most appropriate option. Just as a quick aside, that's the same reason that we don't have forecasts in the market. I'm not keen for us to have any forecast in the market until we have real clarity on how our products are performing and how this cultural change that we're enacting with the organization is impacting our revenue line.
The 2 new products you were referring to. Sorry, Jonathan.
If I could just add that, as I said earlier, at the exit of the year, our burn rate is more variable than it ever has been before, and more controllable, and has a high proportion of discretionary spend in it to enable us to control that and move that up and down as we require. Obviously, the more exciting revenue growth curve requires more money, but we have reviewed going concern as a board of directors. We've had the company audited. We have no going concern issues. So we obviously have plans in place, financial arrangements and plans in place and forecasts to enable us to trade through for at least 12 months without any new money.
In terms of exciting new developments, Eva and Captivate, very important components of your portfolio right now. Tell me about the progress you've made there.
Yes, so Eva is a video social network available now on Android and iOS. Initially, when we conceived Eva, it was really about building an asset value for the organization. And what we found in Q4 of last year is that we have a USP that, I'll be really honest, we didn't initially conceive. It just happened serendipitously from building against our platform. And that is that we can allow brands to create user-generated content and then own that content and repurpose it on Facebook, on Twitter, on their website, wherever they want. So they can run campaigns, much like Movember did, to get their users to record content, and then they can have a license to that content and reuse it on their owned and paid media. So Eva has undertaken that pivot, and now we're building out a pipeline of agencies, design agencies, brand agencies, advertising agencies, who we will use as kind of resellers to that. We will offer them a net rate for a channel for a month, and then they will sell that on to their clients. We have kind of an impressive portfolio of very well-known agencies that we're engaged with right now who we're looking to explore the Eva opportunity with. That said, it is the risk element of our portfolio, and we don't know how it will evolve, and so we'll see how that evolves over the next few months and make appropriate decisions about how we might grow that sales team if appropriate. Captivate is an online video editor, an e-commerce platform, almost an entirely variable customer acquisition cost, and it's coming out of beta now, and we'll start to try to monetize that product, and there'll be multiple months of really iterating against the different conversion cycles. One of the great things about an e-commerce product is that it takes a long time to get a stable conversion rate. But once you've got it, it's just a lever that you can crank, and the more you put in, the more you get out. And so that's where we are with Captivate.
And in terms of the other key advances the company has made in the first few months of 2016, there's this agreement with IMG Media, a massive company in the US. So how significant is this for the company? How much is it worth?
Yeah, it's potentially a very significant deal for the organisation, but I hasten to add that it's one of a number of opportunities that we're working through. That one happened to close at that period of time, and we expect others to close too. So, we've closed that deal. We have clarity on how that will evolve over the year. There's a fixed element to it, and then there is significant upside based on events that IMG support. But honestly, that's now handed over to post-sales team who are supporting that agreement, and the sales guys are really focused on the rest of the pipeline and closing even bigger opportunities than IMG.
The important thing to remember, this is an example of how we are focusing our efforts in certain areas such as sports. And you'll see from the announcement that sports revenue within the 700K rose 188% year on year. Significant increase in activity in that sector. And what that means is our average contract value is rising, because these are longer term arrangements. And that's partly why we have this increasing figure of future revenue and deferred revenue that we're seeing, as because of our focus on sports. And IMG Media is just one significant scalable client. We're only just, on the surface here. There is so much more that we can do with that company and with other similar clients in that sector.
So what will you do then to capture new clients? Increase your marketing efforts, your sales efforts?
Yes, so we have shifted from 1.8 FTEs in a commercial role to 7, or at least it will be 7, hopefully, if we can close out this one role that we're trying to close out now. So 7 by the end of this quarter. So that's a significant shift, and it's probably the most important. The second element, though, is that we augment that sales resource with variabilized sales teams. So in the US, we've appointed Richie Murray, Director of Sales in Americas, and he works on an entirely variable basis. If he closes deals, he makes money, and if he doesn't, he doesn't. And actually we have a number of different agreements like that in place, not just on Foreseen actually, also within Eva and Captivate, where we have resellers who are branding themselves as Forbidden Technologies and selling our product out to market. So the way that we'll grow is through our in-house sales team and augmenting that with these variabilized external resellers and sales teams too.
There is one aspect of the changes you have implemented in 2015 we haven't discussed yet, and it's the changes of the management structure. You took over as CEO in November 2015. Jonathan, you joined as finance director. How is this going to place the company in a much better way to capture all these opportunities in 2016?
Yeah, I think to answer that, I'll start by the board approached me before November, significantly before November, and asked me to take over as chief executive. And I'll tell you, Charlotte, it wasn't a straightforward yes. It wasn't a direct yes, I'll do that. Myself and Jonathan and the rest of the executive team went through a pretty long and deliberate strategic planning process. We really wanted to understand as a team, do we believe that this can grow as a business, not just in the short term, but in the 3 to 5 year period? Do I believe personally that this could be a tens of millions of pounds business? And if the answer to that question was no, I wouldn't have accepted the role in November. However, having completed that exercise, I was completely convinced, as was my team, that we can in fact grow this into a very significant business based on the IP that we've built. I was convinced to the extent that I asked the remuneration committee to give me a salary that was 25% lower than the average AIM CEO salary, significantly lower than my independently valued external value, and to give me in exchange a significant number of options that vest in 3 years from the date of issue. I have around 1.4 million options at around 8.5p. And my objective is to make those options as valuable as possible. I am aligned with shareholders in my own remuneration. So we have put in a significant amount of sweat equity into the business. And so that's really important for me. I get asked that a lot. So it's really important that people understand that we are financially very invested in this organization. So how do we move this company forward? How do we achieve those objectives? It's actually about a cultural change. It's, you know, the reorganization is done and now it's a cultural change. It's shifting from product first mentality to revenue first mentality. And that can take time, but actually we're making great progress to that end and hopefully our future results will bear the fruits of that effort.
Okay, so to wrap up, 2015 was a year of stabilization, reorganization and regeneration. What will 2016 be the year of for the company?
Well, in short, I hope it's the year of growth.
And the year where you could post a profit?
Well, certainly the year of growth.
Okay. Well, thank you very much to both of you.
Thank you.
Thank you.